Yo, 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 what's going on, everybody? So, today we're going to be talking about, you guessed it, AMC. We're going to be going over the good, the bad, and the freaking ugly. But all in all, guys, more good things to talk about than bad things. So, let's just jump right into it. So, AMC was down 2.76% today, but decent trading day. We got some highs, we got some lows, and all in all, it was mostly because of a shaky market. All in all, we had the SPY, we had the triple Qs, and most tickers were pretty red today. That's a fact. So AMC at this point in time is strictly being driven down by major indexes. We know they're not correlated, but guess what? You guessed it. It's a funky freaking market. So let's jump right into it. So first, we are going to take the macro perspective of how we traded today. We are going to first look at the 30-minute chart. So a few things to talk about. Well, it looks like we are getting some overhead resistance, which we did bounce off of today. We got rejected, and that was the same rejection that we did get yesterday. That $19, and we can call it like 12, 15 cents, somewhere around that area. So we did get rejected, and yeah, not great. So I do expect, hopefully tomorrow, because let's be honest, let's get this freaking selling over with so we can move on to better and bigger things here. So I do think tomorrow, because of this rejection, because of the increase in sell pressure going into end of day today, and based on some key technical levels with the S&P 500, I do expect that we do start a small decline going into tomorrow, hopefully filling this gap range here. That would be absolutely ideal. Because if we do look at the volume here, volume was decent today, relatively speaking, but still low volume and actually lower than yesterday's volume. And we'll talk about that in a minute. Don't let me forget. I forget. You guys can't remind me. I'm not live. But anyways there. MACD on the 30-minute chart, we are starting that decline. It looks like we're going to be going back into that oversold territory. It is what it is. MACD looks like we are about to have a small crossover. I don't expect this to have crazy price action on us. It's not like we're going to drop another $5, $10. I think this will kind of be our final dip down into this range before we get that reversal along with volume. But before I forget, let's talk about volume, which is a good thing. Well, obviously, this dip and this kind of push down for the past couple of weeks, and honestly, let's be real here, the past couple of months has been ugly. A lot of selling pressure, a lot of volume on the sell side, and it sucks. But what we have been getting, and we're going to look at this right now, here on this big day, we got 41 million shares traded on this down day. This green day kind of looks like a hammer candle here. Yeah, somewhat of. That was 56 volume. Now we went down to 55 million yesterday, and today we're at 35 million. So what does that mean? And what is that telling us? Well, it's telling us that, listen, shorts are exhausted here. We're not having the volume to the downside. There isn't a huge demand to push the stock much further down, and I'm not saying that we're just going to start ripping tomorrow. But no, I do believe we're going to start these low volume kind of bleed into this area before we get that reversal. And seeing volume diminish quite rapidly speaking, especially from yesterday to today, that's a good sign, guys. If we have the stock declining with volume decreasing as well, that's a very, very bullish sign. And of course, once we compare this to the SPY, once we do compare this to the overall options flow for AMC and the S&P 500, it will make a lot more sense. Now, additionally speaking on this one-day chart, look where we are with RSI. We're currently at 24.18. Last time we were this low, I mean, this was at like 28, but actually over here, we're at like 21 on the RSI scale. And actually, not quite 18. We'll call it like 20. So we're getting pretty damn close to this low over here. And that was on 10/14/2020 when AMC was just absolutely beaten up just so terribly. So all in all, guys, I don't quite think we're at the bottom yet, but some early bullish signs are absolutely showing. First is going to be with the RSI. Second is going to be with diminishing volume. And third, Well, third is actually quite exciting, and we're going to jump into the options flow for AMC. Would we get a lot today? Well, of course, we did see a pretty significant influx of these 3/18/2022 and the 2/18/2020 puts. But what we've been getting is a lot of these puts have been being sold. And yes, certainly, guys, this is profit taking because let's be honest, these traders made some decent cash. It is what it is, guys. There's always a buyer and a seller and two sides of every single trade. But the good thing about this is selling your puts, as you can see from this very nice illustration here, is a bullish thing overall. So the fact that we're seeing some of these more short-dated contracts start to be sold off symbolizes that, hey, listen, we might not be at the bottom quite yet, but these people who were in puts who also have pretty large positions don't see as much downside in the near-term future. So that's a good thing all in all. One thing I do want to note, which were actually a little bit of smaller trades comparatively speaking here, we did get some bearish activity for these $36 strikes for 6/17/2022. But that's nothing to worry about, guys. I think all in all, seeing yesterday's and today's data coming in with specifically a lot of puts being sold, that's exactly what I'm looking for signs that a bottom is in or a reversal is incoming. And also, just a quick note before we get any deeper, I am starting to release, and it's probably going to be at first a weekly basis, but then I'm going to start doing more and more of it, just more educational-based videos for the channel. So if you all, or if anyone has any suggestions, please message me because I'm open to really just teach whatever you guys want to learn about. The first video, which will be live tomorrow, is just going to be the basics of technical analysis. I'm also going to be releasing a video this weekend, which is going to be more based on unusual whales, how to navigate it, and how to really just get a sense of the overall direction based on the options flow. And I'm going to really start, hopefully this weekend I'll film it. It's going to be more based on options trading, going over the Greeks, all that fun stuff. But nonetheless, guys, back to this. And it looks great. So we'll move on back to the charts because what we want to do, and really how I'm going to be basing this channel in the near time future, or for the foreseeable future rather, is going to be more comparative to how AMC is trading against the S&P 500. Because let's be real, we're trading pretty spot on to the SPY. So what we have with the S&P 500 is this overall bearish just activity. I mean, look at this. We've been in this trading range for, since the COVID crash back in, we can even say the start of it was here, like 2/25/2020, and we actually recently broke out of this. It's not looking good for the SPY. Let's be real here. So, like AMC, the SPY has been decreasing for literally since the beginning of the year, and it has been ugly. The S&P 500 has broken out of this overall trend here that, like I said, has been established for well over a year at this point. So the breakout, certainly not a good thing, and breaking out to the downside, which was expected, is not great. What we do have is, we did have some upward trend established here, first on 12.3. We hit it again here on 12.20, and again today, but obviously it didn't hold up because we had a pretty severe end to the day there. So really what I'm looking for is, if we can't hold support at that $450 level, this generalized support area here, it looks like we are going to be coming down to fill this gap, or even this gap right here as well at 448. So we could fill this gap, we could fill this gap right here, and even this one right here. So we're really going to see how this plays out. I would be hopeful at least to see some type of support at this 450 area, because as you can see, this has been support, it's been resistance, but primarily speaking, it has been support for the past, we'll call this like 5-ish months. But some bearish signals. We do have a pretty steady, and you can say volume was here, 109 million, 108 million. So pretty much the same exact volume on this decline from yesterday. So until we start seeing selling pressure decline and some type of bottom out on the S&P 500, we can't expect AMC to really follow the same. And that makes sense because we are getting very close to that gap fill at our target area of $16.50-ish to $17. And the S&P 500, well, yeah, getting close to hopefully finding a bottom. Let's see if it can, because if it can't, well, it's going to be an ugly couple of months here. Now, why are we talking about this, guys? Well, because it relates. There's some type of correlation, even though the correlation doesn't really make sense. Me personally speaking here, what I was looking for today was A, yes, this gap fill, but B, to kind of all in all support this trend here. Since we broke it, it's not looking great. Last hope is at this 450, and that's where I really do expect to see some type of gap fill at this area down here between those 435s and 438. So we'll see how this pans out. But of course, guys, the overall marketplace just doesn't look great at all. So what I am going to jump into is the SPY options flow, do the same thing we did with AMC, and then paint a larger picture for what we can expect for the rest of the week. So SPY, biggest option trades today. We'll start with this. Well, these expirations, this 1/21/2022, so for Friday, 480 put for $28 million. But also, really the biggest plays here have been purchasing puts. Now, a couple calls were purchased, but still not enough of those puts being sold for me at least to see and say, okay, we may be expecting some type of reversal. So that's why going into tomorrow, I'm absolutely bearish on the S&P 500, and that is why, all in all, I am going to be bearish on AMC. So we'll just jump back to AMC real quick and just do a quick synopsis here. I do want to jump over to this 1 hour chart because 1 hour charts, guys, by the way, is literally one of my favorite time frames to view. So coming up, obviously yesterday, we did gap down in the morning. So we do have this gap fill right here at like $19.90, and we can call it $20. But as you can see, we have been kind of establishing some type of pattern where, and we can even zoom out, since this date over here where you consolidate, you drop. You move up slightly, you fill the gap, consolidate, drop. Same thing has been playing out for, you can call them fractals, you can call them patterns, you can call them whatever you want. But same thing is just going on. And I do believe that this pattern is going to last until we fill this gap area here. Now, last thing I do want to talk about is just the bigger picture of things. Specifically, we're going to jump back in time and do a little bit of time traveling. So, back in January when we first had that massive run-up, we went from this day here, 126. We're at like, call it $5. We'll keep it nice and easy. This doesn't have to be spot on. Directly open the next day at $20 and some odd cents. I mean, that's insane. But what we did was we left this huge gap area here. What happens right after this? Well, we come back down and we fill this gap. As you can see, this was filled. I can't tell if it's to the T, but pretty freaking close, guys. And that's really kind of what established, okay, we found our bottom. We bottomed out at this area, consolidated, and that's when we really started getting funky with AMC. Some great price action, and then that all led to the January run-up. So what I'm trying to say here is this was our last area before we had that massive run-up. Now, if we look at June, boom, we have this. And this date right here, when we did jump the gap, that's really what led to the AMC run-up. And we had a few gap fills here. We had this right here, which we did come down and pretty much fill right away for the most part. I mean, a couple weeks, but guys, in trading, a couple weeks, some people is a lot of time. And for others, it feels like freaking eternity. Because I know this probably feels like eternity for you. But what I'm getting at here, sorry for all my ranting today, very talkative. But what I'm getting to is, yes, that is why we are targeting this gap fill. I want you all to have reasoning behind the trades and reasoning behind where we're headed with AMC. So that's my reason, and hopefully it all makes sense to you, that we do kind of fill this gap area and then start some consolidation before that bullish move up. That's what I'm hoping for. We'll see how this plays out. And just a last update, because I know we have been talking about Wyckoff, and surprisingly, I actually had a few people yesterday say, wow, where's the Wyckoff technical analysis? So I'm glad you guys like that. It makes me happy because absolutely love that shit. But anyways, Wyckoff is still in phase C. I didn't talk about it yesterday because, let's be honest, there wasn't really a lot to talk about besides downside. And phase C is an ugly phase. It's where you get that spring, your terminal shakeout. So essentially this right here, and sorry I didn't label this, and you know what? For the hell of it, for an educational based purpose, we're actually going to go ahead and label this real quick. So you have your cell test in phase B right here. Did not mean to hit enter, whatever. So that's your cell test in phase B. So this means this area right here, we'll call this, where's my text? Here is going to be your selling climax. I hate the way Webull does this. Trading View is certainly the way. I just have to sign up. Automatic reaction. And I'll link the schematic that you can look at in the description. Take a read through it, and it's not about how the chart looks. I mean, sure, that has a little bit to play with it, but it's more based on volume trends, analysis, technical analysis, and a lot of different pieces all put together. So I've gone through this, so I hope you don't think I'm just throwing random letters into random places here. But you do have your selling climax, your automatic reaction, your cell test in phase B. Per the schematic, after your cell test in phase B, you do have a push to the higher end of your trading range, which is established by your stoppage in your selling pressure here, which we can say is like $33. That is typically lined up with your automatic reaction, but lower than the, I guess you could say, reaction from your cell test in phase B. And then you kind of start that decline into phase C. And what happens in phase C, you either get an LPS, where you kind of trade. This would have been like an LPS area where you just like trade flat and then start moving and marking your way into phase D, which is a great volume push area. And that kind of leads you back to the top of your trend. Or in phase C, if you don't get that LPS phase, you do go into that spring phase. Now, a spring is just lower than your trading range. So technically a spring for this example could be at, let's say, like $19, because it is lower than your cell test in phase B. But what we're getting is a terminal shakeout, which, quote unquote, from the schematic, a terminal shakeout is a spring on steroids. And that's exactly what it is. So where we are right now is we're still in phase C. We're still in that terminal shakeout phase. And I hope we do see some bottoming around this area. Hopefully 1650 is going to be really the key point. I mean, based on RSI, based on volume diminishing on that one-day chart, based on the options flow, I really think it will be. But of course, guys, the terminal shakeout can go much deeper. And just real quick before we end it, the same thing applies to this overall schematic that we've been looking at, where you do have your selling climax, automatic reaction, sell test in phase B, your push, you trade down, and then this is where we are in phase C. We're still in this corrective state, going for our deep terminal shakeout because we're well below our trading range at this point. So, guys, a deep terminal shakeout, well, that's a spring on lots of freaking steroids and way too much pre-workout. So, for you gym rats out there, you can put that into context. It's not pretty. But anyways, guys, all in all, don't panic. We are in a great place all in all for AMC. You know, I'll be back tomorrow with a quick little update. Hopefully things go good. Hopefully we bottom out. But until then, enjoy the night, enjoy life, and Dave will be back tomorrow. Peace out.